You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, that rockin' tune means it is time once again for the Option Block, everybody's favorite bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, a little bit of analysis, a little bit of education, a little bit of strategy, a little bit of unusual activity. Throw in a dose of what's trading and what's coming around the block, and you have the Option Block. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-exciting Options Insider Radio Network. You guys know the drill by now. A baker's dozen worth of programs for you guys to choose from on said network, including we're getting close. I'll have to check the exact number, but we're closing in on the mythical 400th episode of the Option Block. Let me just check really quickly here as we launch the show to see what number we are on. This is this is number 399, listeners. So one more until the mythical 400th episode, and I have no idea what we're going to do for that, so I'll have to plan something spectacular. And of course, you can find all of those archived episodes at the mothership, theoptionsinsider.com, as well as iTunes, Stitcher, Aha Mobile. Working on a few other fun outlets for you guys to find it on as well, and including our mobile app available for pretty much all the mobile platforms you may want to use, except for Windows Mobile. You don't have that, but not a lot of people are really complaining about that, so I'm guessing we don't have a lot of Windows Mobile users out there. But if you're one of them, let us know. We'll see what we can do for you. In the meantime, let me introduce the rest of the old all-star panel, starting off with the man who couldn't join us at the beginning of the year, but he's back with gusto today. He is the man of many hats, a.k.a. the Viceroy, a.k.a. Mr. Alex Jacobson from Options Express by Charles Schwab. Mr. Viceroy, welcome back to the program, sir, and Happy New Year to you, a belated New Year to you on this program today.
Thanks, Mark, and Happy New Year to you as well. And for what it's worth, it's snowing like a bear out in the burbs.
Yeah, it's snowing downtown too. It's a little whiteout we got going on here in downtown Chicago. So that should be a fun one. But we're nice and warm here in the old Options Insider Studios, and you're nice and warm in Casa Jacobson. I can't really speak for Maine and the rest of the hinterlands. Maybe we'll check in now and see how they're doing. Starting off with the man beaming in from the second farthest distance. Actually, I don't know where he compares to Casa Jacobson. Maybe you're closer. I don't know. But beaming in from lovely and scenic St. Charles, where of course it never snows and it's always a balmy 75 degrees. Mr. Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program. I already wished you a Happy New Year in the last show, so I won't bother again. But how are things out there in St. Charles today?
Oh, doing well. It's a balmy 76 degrees, well, minus about 70 of those degrees. And don't quite have the snow that we had an hour ago, so I think we sent it more towards the city. We wanted to be and 'tis the season of sharing, so we wanted to share some of our snow with you guys.
Yeah, that's what we need down here on Wacker Drive in downtown. Just a nice foot of snow to really make things just go so much more smoothly in the evening rush. We really appreciate that. Thank you for your gift from the hinterlands. Speaking of the hinterlands, we are joined last but certainly not least by the man way, way out there in the hinterlands of Maine, the Pictish wilderness, if you will. Who knows what's going on out there? Could be a blustery 50 degrees and nice and warm. Could be minus 35. No idea what's going on. So let's check in with the Rock Lobster himself, Mr. Andrew Giovinazzi. See what's cooking out there in the Pictish wilderness known as Maine.
It is frozen. Frozen, frozen, frozen. Double frozen.
Let it go. Let it go.
Spoken like a man who has a young daughter.
And you know, the hardest part is Mark's like, oh, no, you're going to do that. Mark's like, oh, I got the show today, because I'm planning my little skating afternoon. No. Last minute, Andrew, I need you to do the show because we have to go. He had to go talk to a client. So here I am because I love the Options Insider Radio Network, Mark Longo, and all my co-hosts.
And of course, because Mr. Sebastian can't handle his schedule, just can't handle it. He needs a schedule.
That would require him to write his schedule down somewhere.
Indeed, we all know what a production that would be. All right, with the team assembled, let's dive right on into our second trading block here for the year.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. If you're just joining us for the first time here in the new year, first off, welcome. Second, where you been? We had about 400 episodes in the can. And third, this is the portion of the show where we break down what's trading, what's been catching our eye in today's activity. If you heard our last episode, it was pretty much all about sell, tax profits, tax losses being captured there, all kinds of tax selling going on at the beginning of the year. Most of the major indices were down about 1.7, 1.8%. And let's just flip that script here on today's show. Of course, we are recording Thursday, January 8th for all of you playing the home game. And it's pretty much exactly the opposite of what we just talked about on the last episode. All of the major indices are up about 1.7%. The Q's up a little bit more, up about 1.9% on the day. And the VIX was up about 2 handles last time. Now it's off a little over 2 handles, about 2.1 handles to 17.21. So pretty much the polar opposite of what we talked about on the last show. And of course, we are starting to come in to the early part of earnings season. It kicks off next week. So that'll be interesting to watch and see where that takes us for the early part of the quarter here. But so far, at least, seems like we're starting the year off with a bit of a familiar story. Some sell-offs, and we just wipe all that out, and we erase it all, and we go back up to the upside. And as our resident bull, perhaps I'll start with you, Uncle Mike Tusaw. What caught your eye in today's activity, in addition to just the plethora of buyers?
Markets always go up. It's that easy. I don't even know why we need to bother with the show. Just go long and go home, right? Now, Apple obviously caught my eye today. It's up just under 4%. That's definitely one on the list, but that always catches my eye. The thing that I think is kind of nice to see finally is the bonds actually went down a little bit. I wouldn't say that anything, maybe you could make a case for Apple, but I don't know if anything's really overheated in our market right now. But bonds, I think, are, because of the fact that they've just gone up so doggone much. So bonds actually went down today. I mean, that's huge news. The other thing that I was definitely watching, oil. Everyone watches that all the time these days. But in terms of some individual names, nothing really stood out too much on an individual level besides Apple. But in general, blue chips are up, everything's up. And to quote another kid movie, I guess everything is awesome.
You're just full of the kiddie quotes today, but I can certainly sympathize on that front. But of course, you mentioned Apple. I can't believe you said the words Apple and overheated in the same sentence. Apple closing today just a little bit shy of 111.83, up about a little over 4 handles on the day. A lot of that, of course, coming from the just general drift of the broad market, as well as perhaps some additional love coming in the consumer electronics sector in the wake of all the big announcements coming out of Las Vegas this week. So Apple usually does well this time of year anyway, and it certainly seems to be following the course this year as well. Mr. Viceroy, missed you on Monday, so you had a lot of time to reflect and watch the markets. What's been catching your eye here in today's activity?
Well, I think Mike talked about it a little bit, but clearly NASDAQ today running away from the S&P and the Dow, and some of that was Apple news. Some extraordinary news out of Apple. I mean, store sales were up 50% for 2014. App sales were up 50%. I think that's just what the market was looking to hear. I mean, this is like the last time I was off the show where the market went down and then the market went back and said we could make that joke like, well, I didn't miss anything, did I? That's what these first few days have been like. I mean, massive tax selling, and then last couple of days, not really a ton of news other than Apple, a little bit of the employment news and the speculation. We'll get some more job data later in the week, but the market has demonstrated a little schizophrenia here over these first couple of days, and I think part of that is, and I know I harp on this a lot, but I think part of that is Dodd-Frank. I think you have just, as of January 1st, you have fewer and fewer dealers, and you had Goldman this morning talking about JP Morgan should be broken up. It's kind of interesting because they compete in a lot of ways, but I just think the dealer community is getting thinner, and in 2015, we're going to see more volatility because of the lack of dealer capital that's going to be out there, and I think that's part of what we saw here in the first few trading days.
Yeah, it certainly was a ongoing refrain at the end of 2014. What exactly is the impact of all of these regulatory changes we're seeing on the market? Are they to blame for perhaps some of the increasing volatility and vol that we saw toward the end of the year? A lot of these institutional players perhaps on the sidelines are being forced to trade smaller size or not at all. So what is the net impact of that? I think we're still waiting and seeing on that front, and certainly could be to blame for a lot of the larger, more dramatic swings we're seeing in the marketplace these days. Take us home, Mr. Giovinazzi, Mr. Rock Lobster. What caught your eye in today's activity, sir, in addition to all your fanciful gazes over there at the pond for your hot skating?
We had a conversation today, or actually yesterday, with Mark. Like, I just don't want to be short any realized vol near the money. I don't want to be short gamma, and it doesn't matter. It seems to matter which day it is. Yellen speaks, and the next day everybody loves it. I think she has done a pretty good job. I think she does a better job of owning the market than Mario Monti does. She's done a pretty good job of massaging fears and saying, well, we're going to raise them, but we really don't like it, but we're probably going to do it. I mean, she obfuscates to, it feels like, to a degree that it just makes the market want to rally. So I would not get in the way of the route of stocks going up. It still feels like they want to go up. Now we have low oil prices. We might not have China growing like crazy, but you've got the rest of Asia, everything else. There's lots of other places in the world that are generating economic growth. So while Europe gets all the headlines, and I think that those Greece fears always freak people out because they're kind of scarred from 2011 and 2012 on how bad the sell-offs were when they were going to break up the euro. It pretty much sounds like there could be a lot of rhetoric, but they're not going to let the euro break up, and Greece will be stuck in there, and it'll just be kind of like the prodigal son, where they're just going to have to keep giving him money every once in a while. But as far as stocks, it seems like it fills every gap. Every time we have these sell-offs, you have the parabolic gap fill. And to me, that just feels like a liquidity thing. We were just talking to our clients today. You sit here and you watch. Like the trend in the morning, you're up 16 handles on the futures, and you just, you watch it because it's going to keep going in one direction once it starts these moves, either up or down, and it just keeps going all day long. So I don't see how that's going to change. And if we're at all-time highs in a week, wouldn't surprise me. And I want to make sure, again, like it's saying, don't stay in the way. If you like selling premium, even when the volatility is relatively elevated like this, just be aware that you might want to hedge those short deltas if they start getting a little too short, because that's what we have. We have rallies that just keep going. So I mean, I couldn't tell you what made the market rally today. You know, the SPX will go up 1.5% or 1.75% at one point. So I guess just you know, when Alex was saying lack of liquidity, and I think that's what we have. You know, all these guys in Dodd-Frank with these great ideas, well, they might end up with a market twice as volatile as the one we used to have, which wouldn't surprise me.
I'm looking here. I know all of you guys out there, not most of you, well, some of you like to write in with questions about technicals and all sorts of fun stuff. Uncle Mike gets to be our resident technician on the show because he looks at charts every now and then. I think the rest of us tend to look askance that sort of thing. But well, that's a conversation for another day. But I know a lot of you like to read into the tea leaves in the early part of the year here. I saw an interesting article today talking about how the S&P has started off the year with 3 straight losses. When are some other periods when that's happened, and how has the market performed in those periods? There's only been, since 1928, only been 8 years where the S&P has done this. Has started off the year with 3 losing sessions. And you'll be happy to know, all of you diehard bulls out there, that only one of those years, so 1 in 8th chance there, that the S&P finished down. There are other 7 years it finished demonstrably in the red. So there you go, Uncle Mike, you diehard technician, you. Yet another argument for your never-ending bull market here at this point.
What reason does it have to end?
None, because you only have pretty much a 1 in 8 chance that we're going to have a down year this year. So there you go. So pretty much just buy your calls and sell your puts and go home. You're looking pretty good.
There you go.
All right, so that's our resident story here for the handful of you out there who like to watch charts. Meanwhile, we're going to keep on rolling right on into our next segment. It is time for that ever-popular portion of the show where we dive into some of the weird stuff going on in today's activity, as it's time to dive on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, you know what that funky tune means. It's time once again to dive into the weird, the wondrous, the sometimes just downright whimsical paper that we're seeing lighten up the old tape today. Going to kick things off with a product we have maligned many times, usually fairly, occasionally unfairly, but usually fairly here on the old program. That is one a lot of you guys like to watch and trade as well. It is VXX, of course. This is the short-term VIX ETN out there. Ticker symbol, surprise, surprise, VXX. Closing today, $30.77, down about $2.11, or about 6.5%. On the day. And as you might expect, since we talked about it many times on the show, this is a fairly robust product. Some days this is the #1 exchange traded product by volume out there, the underlying at least. So it does some serious paper, and the options are no exception. It's been averaging about 350,000 contracts so far here in the new year a day, doing well over that, doing nearly 430,000 today. So people just loving themselves some VXX here in 2015. So good to see at least some things are still the same. Some things haven't changed from the yesteryear, the days gone by of 2014. And when we're talking VIX and VIX-related products, we tend to talk on the call side most of the time. And most of the products we talk about, people just tend to pile into calls and tend to forget that puts are even listed. Not so much the case today here in VXX. What we saw was some put action. In particular, it was long-term puts. Let me scroll my chart down, listeners, so we can get all the way to where these puts are listed on the old option chain. These are the Jan 2017 15 puts. Yes, 2017, I said, listeners. So got a few years in the bucket for these ones. Going up, when we profiled them this morning, 10,000 times in one massive block. It doesn't really surprise. This is very long-term, very illiquid strike. You probably need to negotiate size like that, and they certainly did, putting it up in one chunk. As the day went on, another about 2,500 or so went up on the strike for a little over 12,500 total on the strike. And if you look around at the open interest, this strike really stands out. It's about 74,000 contracts open interest. It's very much the leader by a mile of everything else in this month. It's pretty much, it probably is more than the aggregate of all the other strikes here combined in Jan 2017. For way of comparison, the Jan 16 puts in 2017 have 34 contracts open. So a lot of size here on this strike. Of course, a lot of that following on the heels of a trade you may have noticed us talking about on the site yesterday. So we do talk about stuff in between shows as well. If you do miss those, listeners, I encourage you to surf on over to theoptionsinsider.com or follow us on Twitter and Facebook, all the other places where we put all that content out. You can see we were talking about a mega chunk of 50,000 puts going up yesterday following, guess this guy wasn't done. He wasn't spent. Another 12,000 or so going up today. Now, we've maligned this product many times, and particularly being not well suited for this kind of use case that we're talking about, long-term speculations here on VXX. That's us usually talking about it as a buy and hold surrogate for the VIX. We don't usually talk about it, people getting on long-term to the downside. So that's a little bit of a flip of the script here, which is kind of interesting. Mr. Rock Lobster, it's been a pretty busy day for VXX, or I should say busy couple of days for VXX here. What's your take on our friend kind of flipping the script and getting on some size downside here in VXX and not expiring next week or next month, but 2 years from now?
That's a very good question. VXX, if I asked you what the split adjusted price for VXX was 2 years ago, what would you say? Just give me a number. Just spit one out and humor me.
I'm trying to remember what the split was, how much of the split was.
Well, if I told you 110, would that surprise you?
Oh.
$110. So
more of a split than I thought.
It got real splittier, right? So if you bought the 50% out of the money option, that would be the 50 call. That thing would be about $20 in the money right now. I know, crazy, huh?
Not bad.
Not bad. So I think this customer looks at the long term, and you want to hear something even crazier? The 3 year ago price for VXX, $519. So when you think about long term in this product, thinking long term short's probably not terrible. So, and as we know the history of the product, it does a lot of reverse splits. I think the last one was last year at some point. We had a relatively volatile year in 2014 as far as we had some big swings, so that kept the product from being split again. But once it gets sub 20, I think the low of the year was 25.5 or something like that. It's on its way to being split 1 for 5 again. So I think this is I think the right type of long-term play for this.
So you're saying this man is an out and out genius, is what you're saying?
He's smart like a fox.
Yeah, I'm looking here. My charts only go back about 2 years here on VXX, but split adjusted, it was about 107 2 years ago. So you're right. He definitely is on the right side of that train, yep. Long term here.
So I mean, the thing is just I thought the entry point was smart because he's picking a relatively elevated level for the product for this year. It's not the highs of the last. It's not the highs of the last year. But it's still, it's a lot better than 25 to kind of get started because, you have a two year drift for a product. It's going to take you 2 years to make the money you're looking for. It is not a short-term trade by any stretch of the imagination.
This one definitely gets filed in the to be watched category. I'm doing it right now as we speak because there's certainly a lot of time, A, and this one, and B, interesting tone and construction to the trade. We don't see a lot of this going up in VXX. So.
Could this be for the 500th show? If we do 2 shows a week, 52 weeks, that's 100 shows. So 2 years, that will be that'll be like around show 600.
There we go. We can check back in our 600th episode spectacular.
On the extravaganza, the 600th.
Meanwhile, I'm still trying to figure out the 400th episode spectacular. So get back to me in a little bit I'll get to 600.
Hey, and Andrew, how hard is that for the crowd to hedge a that long dated LEAP product? What are they going to do to hedge it?
Well, the first thing is it trades at a 78. I think the vol was around 78%, which is pretty darn high. So as long as the crowd owns any kind of near-term options, hedging that is not a problem at all, because the gamma from the shorter term stuff way will overwhelm the gamma from that type of product. And the I mean, when you think about it like this, I was looking at volatility on this thing. It was like 78% for this put, and which is pretty high relative to just about any volatility there is. So they charge, let's just say they're charging full pop for volatility in this name. You are spending, you're not getting any long-term discounts for this particular stuff. So, I mean, we've had volatility in the short term drop to the 40s in VXX in 2014. And if you're paying 70, 74, 75 vol for something that's 50% out of the money, it'll be relatively easy for people to hedge just because of the gamma differential.
And of course, a lot of this went up upstairs too. So a lot of the upstairs desks having to spread this off. I'm sure the guys in the crowd didn't suck down all 70,000 contracts.
No, it looked like it was just matched.
Yeah. So a lot
of, I'm sure this is a trade. I think the seller is happy, the buyers are happy, and it does provide some sort of long-term Vega hedge too as well. 74 vol is a pretty decent level overall for VXX. It does get super high short term, but it ain't cheap for sure.
We love these trades where everyone's happy. The buyers are happy, the sellers are happy. We're happy because we get some fun, unusual activity to talk about. You guys are happy because you get something to listen to on your endless commutes. Everyone's happy here. Now, speaking of everyone being happy, I'm not sure if that'll be the case with this next one, but we'll see. We're moving on to this name we talk about all the time here on the show. In fact, the show episode hardly goes by that we don't talk about good old Brunswick Corporation here on the program. It's one of our favorites, right up there with Apple on our daily monologues here on Brunswick. Of course, you guys already know it by heart. Ticker symbol BC, closing today, $54 and about a quarter or so, up about 270 or nearly over actually 5% on the day. And of course, Brunswick lighting up the tape every day, doing a whopping 410 contracts a day. In case you can't tell, listeners, I am joking. And of course, doing about 5,700 contracts today. And we're going to have to dial back our expiration graph here to find today's paper, not perhaps as long-term as our friend out there in VXX, but a couple months out. In particular, it was the Feb 50s that caught our eye out here, going up when we profiled them 1,152 times, paper buying for $5.10. Yes, I said $5.10. As you can tell, listeners, these are pretty deep, about a little over $4 in the money calls here at this point. So pretty beefy stuff. That in and of itself is kind of interesting. We don't really see a lot of in the money call buying going up. This went up in one pretty much large block. Some scattered paper followed it after the fact, about 300 more contracts total. This is on 11 contracts open, so all opening paper here. As the day went on, we also saw the Feb doubles going up. That's the Feb 55s. Looks like that could be perhaps a partial hedge, or it could be the old 1-by-2 ratio. They went up about 3,300 times, so it works out pretty close to 1-by-2. If that's the case, that would be an odd trade as well. It's a fairly aggressive 1-by-2 here, very tight, only about a buck or so room here to that 55 strike. So interesting stuff. Looking at the chart here of Brunswick, good old BC, that's pretty aggressive as well. This name has popped up pretty substantially, just like I said, just in the recent session. Like I said, it's up nearly $3 again today. So if that trend continues and this guy is indeed legging into a 1-by-2, he might be pretty sorry and pretty quick if that is indeed the case. Mr. Rocklobster, what's your take on our friend here? Perhaps legging into an aggressive 1-by-2 here in everyone's favorite name, BC.
Yeah, I thought there was potential for that for sure, because you know enough by now, Mark. If it looks like a duck and it quacks like a duck, it's probably
then it's
a
hog.
It's exactly. Now another thing, Brunswick, they do a lot of fitness equipment, but they also marine, outboard motors and stuff like that. You see kind of the price. I mean, this stock was $40 not very long ago, and now it's 50. I mean, when you think about it, when you see a run that big, when it spent most of 2014 going nowhere, maybe somebody thinks lower oil prices means people are going to buy more motorboats. I don't know, but it's crazy bullish. as far as buying the 50 calls. The 55s, somebody wrote them. I don't know who, what, or where. Possibly the 50 buyer. I mean, that gives you some potential. Maybe prior to earnings on this, because let's say the last part of the cycle was, you're selling the earnings cycle against this. So, it's kind of, I would say the sell side, the 55 side is the head scratcher for me as far as, hedging those calls, because you still have the potential of a bit of a blow up selling right at the money like that. But somebody, at least that initial Fed 50 call buyer wanted to get long. So, and maybe they think this is, obviously they think this is going a lot higher. So the stock was a $20 stock at the beginning of 2013. Hard to believe, but actually a $30 stock. So maybe it's time for, it's Brunswick's time. Let's just put it that way. Maybe it is.
Yeah, maybe he wanted to take some premium off the table. And I don't know the exact prices on those doubles. Maybe, let's say he did them for around 180. Then that, of course, works out to, what is that, about $1.60 on the spread then. So that could be attractive, I guess, if you don't think this run is continuing. But that's a pretty dangerous bet given what we've seen just in today's session here.
Yeah.
We could easily blow through that double strike tomorrow, and this would be a very painful trade very quickly. So yeah, you're right. That's a bit of a head scratcher. You got to really want that premium, but then why you trading the 50? It's the whole thing is kind of odd. Again, why we'd call it the odd block, listeners. Give us your own ideas. Give us your own opinions. Why would you do a 1x2 like this in a name like this, or would you, or do you agree with us that it is perhaps a bit of a head scratcher, a bit of a weird one? While we move on to our final name, our final victim here in the old odd block today, another one we can't stop talking about here on the program. This is the Vanguard Emerging Markets Stock Index, ticker symbol VWO, closing today $40.30, up about 70 cents, or about 1.7% on the day. It's a name that does decent paper here for an odd block candidate, about 1,800 contracts a day, doing a whopping 5,000 today. And what caught our eye in particular looked like an aggressive roll here. Let me pull it up again. We're going a little bit farther than Feb this time, but not as far as the Jan 2017s. We're going out to the June expiration cycle. In particular, it was the June 39.44 put spread that caught our eye, going up for $2.80, going up in two large blocks. Open interest on the 44s is about 2,200 contracts. Open interest on the 39s is a whopping 10 contracts. This has all the hallmarks of a very, very nice and straightforward roll down here in good old VWO. Looking at the chart, well, it looks like our friend here is selling the 44s and buying the lower term puts, so he's taking some money off the table here on the 44 puts, playing with a little bit of house cash, and then reestablishing here on the 39 strike. So still not spent of his bullish sentiment. Looking here at the chart, that may not be a terrible play here. VWO hit as low as 37.5 back on December 16th. Since then has rallied pretty much straight north and kind of vacillated south a little bit again, but now has been on another upward swing. So a little bit of near-term vacillation. It certainly could foreseeably, those 39 puts could easily come back into play a little bit. And again, it's always a nice bit of reassurance to be having a little bit of house money to put into your pocket and then spend the rest here on betting again on the 39 strike. Mr. Rock Lobster, take us home. What's your take on our friend here taking some house money and putting it back to work on the 39 handle here in VWO?
I think that indeed is what it is. They were taking some, they rolled down probably a protection for the index. What's funny about is the performance for 2014 for the VWO, I guess outside of dividends, was zero. The performance in 2013 was zero. And in 2012, actually it was up a little bit in 2012. But for the most part, this index has spent 3 years going sideways. It feels like in the emerging markets, sort of, one does sort of good, and then another emerging market kind of tanks, and it's sort of the good balances out the bad. And for some reason, the darn index doesn't seem to go very far. And the only time it looks interesting is when you just buy the dips in the darn thing, when all the emerging markets seem to tank at the same time. So that actually is a kind of my closet emerging market strategy, and it works pretty good. So, because in the meantime, it just doesn't go anywhere. But every once in a while, everybody thinks the emerging markets are dead, and then they sell them all. So we had that a couple times in 2014, and we'll see. This apparently must be this person's strategy as well. If they're collecting some divvies in VWO, and then they just roll the puts down. So a perfectly acceptable type of, I would say, put an underlying strategy.
Andrew, coming out of the closet here on your emerging market strategy here for 2015. Good to see you feel comfortable bearing your soul here on the show finally. It only took you a while, but you're finally comfortable.
Just when everybody hates the emerging markets, that's probably when you should buy them.
Yes, that's when,
because they're all not going away.
That's when you have to love them. All right. Speaking of love, I know this time for the segment of the show you guys all love, and we didn't get a chance to have it on Monday, so maybe we'll get a double dose of Viceroy goodness here. Yes, it's time for the Xpress Block.
The Xpress Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome to the Xpress Block. You guys know the drill by now. This is the portion of the show where the Viceroy takes us behind the scenes into the land known as Options Express by Charles Schwab. Gives us a sneak peek into what the clients are up to, some of the questions they're asking, as well as some of the cool new tools and new features coming down the pike for you guys who are OX and indeed Schwab clients. So, Mr. Viceroy, what do you have planned for today's super special extra mega first Express Block of 2015?
That's not going to be hard to live up to. So,
I'm setting you up.
Pulling back the curtain, if we look back at 2014 and say, what was the most notable change in the business in 2014 and what's that going to mean for 2015? This is probably going to sound surprising, but option volume was up a little last year. I think overall volume was up about 4%, which I think we're all happy with. There were points in the year where I didn't think we'd even be having an improvement in volume for the year. But the one volume number that was up huge for both OX and the industry were futures options. And I think that's going to be a reoccurring theme for 2015, especially with what's going on in energy. But I think the one kind of seed I want to plant early on is for those traditional option customers who haven't looked at futures options, haven't looked at the opportunity in futures options, and may not have an account that's futures options approved yet. I would take a real hard look at futures options. Now, as long as we have the curtain back and talk about what's coming, we've talked a bit already how some of the OX tools are porting over to the Schwab side. 3 and 4 leg trade ticket is available on Street Smart Edge. Idea Hub Lite is available on mobile. Although I don't want to quote a timeline yet. What you're going to see in 2015 is the porting of those tools over to the Schwab side. So a couple things you will see coming is the 3 and 4 leg trade ticket going to multiple Schwab platforms, not just Street Smart Edge, and Idea Hub going to multiple Schwab platforms in the coming months. And as I have a better timeline on those, we'll talk about it on the show. But it's very exciting. You know, I talk to Schwab customers all the time. Yeah, actually, some days I spend more time talking to Schwab customers in some forms than I do OX customers. And there's been that theme throughout has been that hunger for when are we going to see this and when are we going to see this? And candidly, one of the things we talk about at OX is part of the growth we saw in OX over the years may in fact have come from Schwab customers who didn't have the robust tools that they're going to be getting now. So that will be a recurrent theme for 2015, and we'll talk about those as they get closer.
Thank you for that, sir. We always love our sneak peeks behind the scenes into the land known as Options Expressed by Charles Schwab. A lot of cool tools coming down the pike, so I'm waiting for a lot of those to launch because you guys are really cooking up some cool stuff. And I know the OX clients get them a little bit earlier, but even the Schwab folks are getting in on the fun tool love these days, which is nice to see. So all you guys who are writing in saying, how come I can't get that stuff as well? I'm a Schwab client. There you go. It's coming your way pretty soon as well. Speaking of things that are coming your way, it's now time for you guys to take the reins on this madhouse of a program because it's Thursday. That means it's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, like the man said, this is the portion of the show where the inmates truly take over the asylum. Yes, it's time to peer into the old mail block. We love it when you guys send us your questions, your comments, your insights, your feedback, all that fun stuff. No shortage of ways for you guys to do exactly that. You can do it on the website, the mothership, theoptionsinsider.com. A lot of you guys like to use the website feedback form. You can certainly do that. You can post a comment on some of the show notes or articles on the site. We'll find those as well, of course. Or send an email, questions@theoptionsinsider.com. Just be sure to put question for the option block in there somewhere so we know where to route your program to the appropriate show. Or, of course, social media, twitter.com/options, facebook.com/theoptionsinsider, or we're Options Insider on Stock Twits as well. So you can find us. No shortage of ways for you guys to find us. And, of course, we baked most of that into the mobile app as well. So very easy for you guys to make your thoughts and questions and comments known to us. And quite a few of you do, including kicking things off here in the new year. A very timely question came to us at the end of 2014. Of course, we couldn't get to it till now. So still very timely, still very interesting. And a lot of you guys have taxes on the mind. So we'll kick things off with a question from Neil Joyce. He writes, hello, Option Block crew. It's that time of year. Yes, it is, Neil. He goes on to write, I've got some stocks I want to take gains in for 2014, but I don't want to sit on the sidelines for the mandatory 30 days before I get back in. What if I buy a 1-month call to cover the wash sale period, then buy the stock again on day 31? Is that legit from an IRS perspective, or does buying the call effectively make the stock trade a wash sale? Great show. Looking forward to more fun in the new year. Well, great question, Neil. Sorry we couldn't squeeze it in at the end of the year there, but it was still fun to talk about. And I'm sure a lot of people out there have similar questions on their mind. And, of course, whenever I hear wash sales and IRS and all that fun stuff, my mind immediately leaps to the Viceroy. This question has Alex written all over it. So, Mr. Viceroy, what do you have to say here for our friend, Mr. Joyce, who wants to know about using options to perhaps skirt some of those pesky wash sale rules?
Well, let's not use the word skirts.
Do an end run around.
Yeah. Okay. So let's put the disclaimer up first. This is not official tax advice, and you should talk to a tax advisor before doing it. But as I understand it, buying the call does trigger the wash sale, and you would be in violation of the wash sale rule if you replace the stock with the call.
Yeah, we get this question around this time of year, it seems like, in many different variations. All of them want to kind of know the exact same thing. Can I use an option to skirt this, to do an end run around the wash sale rule? The IRS, they're not silly. They're not stupid. They know options. They know how options work. So if you do attempt to swap one essentially long position with another, they will see that and note that. So unfortunately, I wish the answer was something different for you, Mr. Joyce, and all of you out there who want to use options to the same effect. But unfortunately, no. The IRS will still catch up to you. That said, maybe there are some other viewpoints we could share on this topic. Maybe Mr. Rock Lobster got a little bit more of a naughty perspective here on using calls to skirt wash sale rules.
I think the general rule, like when I was like a young floor trader and the floor broker, but like what's legal or what's illegal on the floor as far as activity goes, probably the same as for the IRS. If you have to ask, it's probably naughty. So as soon as you're saying, well, I think I can get away with this if I do this, your next thought should be probably not a good idea. It's kind of the theme when you take a registered investment advisor exam. If you think it is remotely naughty, it's a bad idea. So best not to get them too upset and just go along and pay your taxes. And you know what? When you're making money in the stock market, you should be happy you're paying taxes, because that's a lot better than booking losses. So that's all I have to add there. And I take that advice to heart.
I had that burned out of me very quickly on the trading floor. The first time I got run over by a big house, a Goldman or a Morgan or whatever, with some guy buying 10,000 calls on the close, and the stock's upgraded by their analyst a few minutes after the close, and I couldn't even get my delta hedge off. And I would say to the floor official, isn't that kind of blatantly illegal? And after the 7 millionth time, I kind of just gave up on that one. So yeah, I had that beaten out of me very early. Isn't that naughty frame, but a good rule of thumb to abide by when you're trading. Meanwhile, let's move on to there's a bunch of questions here. Let me try to pick one. We have a name we haven't heard before here. How about this one from Joseph G? He writes, Gamma, aren't them those rays that turned Dr. Bruce Banner into the Hulk? Laugh out loud. Seriously, though, can you sum up what I need to be concerned about with Gamma when selling weekly put options, mostly out of the money with about 4 to 7 days to expiration? I do like this analogy of the Hulk and Gamma. I think they go well together, because it is somewhat apropos. At the end of the day, Gamma can be that nice kind of tranquil Greek. It doesn't really come back to bite you. It's kind of like the Bruce Banner, not really offensive, not really scary. And then bam, it just transforms one day into the Hulk, this hulking monster that just destroys you. And that's so I think I might actually have to borrow that from our friend here, Mr. Joseph G, going forward. The Hulk as Gamma analogy. Mr. Rock Lobster, what's your take here for our friend, Mr. G? I like his analogy. Do you like that? The Hulk as Gamma? Maybe a title for an upcoming webinar for you guys.
I think if the risk desks in Wall Street would have understood that analogy clearly in 2008, we probably wouldn't have been in the mess that
they just needed to read Marvel Comics. They would have been all set.
They would have been all set. But the Gamma basically just turns a little option into a big option. So, to his question about, what do I have to worry about selling a weekly put option? Well, you sell a weekly put option for 50 cents. And we have clients that do it they're really good, that are very patient, and when they decide to do it. But if the market continues to move to your strike, that little option becomes a very big option. And if you're short it, for most people that have not had to really take a catastrophic loss on a short option before, you will learn the power of Gamma. So yes, it is like the gamma ray that gets injected into Bruce Banner and becomes the Hulk. It is exactly that, right? Where options can explode in your face, and that characteristic is the Gamma of the options. It's basically how the option changes price, or the option changes delta with a 1 point move in the underlying. So as your underlying moves, your option delta will basically get you longer or get you shorter, depending on which side of the market that you're on. So if you don't understand how Gamma works, you will most likely learn about it the painful way, as almost everybody that has traded options has before. And you tend to only do it once.
I can just see the title of the webinar now, Gamma, the hulking rage monster in your portfolio. I'm sure Marvel won't take any umbrage at that, Andrew, so feel free to run with that at your earliest convenience.
I know. I don't want to steal any more ideas. We're already in trouble for boot camp.
That's
now
true. You have my lawyers are firing up the documents as we speak for boot camp, but that's a conversation. That's a legal battle for another time. Mr. Viceroy, what do you have to say here for our friend, what was his name, Joseph G, who wants to know about the rage monster of Gamma?
So Andrew did a great explanation of it. And I think when people focus on weeklies, they focus on the theta number and they go, look, I get 52 expirations and the erosion is terrific. But the thing they don't focus on is exactly what's in the question. I also get 52 settlements. And about a year and a half ago, our head of education here at OX did a 1-year study of selling out of the money SPX options, weeklies versus monthlies, one standard deviation out of the money. Now, obviously, one standard deviation for a weekly is a narrower range than it is for a monthly. So let's say this was kind of normalized, and he did it for a specific reason, because we wanted to be able to demonstrate to people that, in fact, over the period he did it, which was pretty much the year of mid-2013 to mid-2014, writing the monthlies returned 4 times what writing the weeklies does. And every time I say that, somebody looks at me and says, no, he said that wrong. Keep in mind the gamma issue, which is the settlement issue. And if you write 52 weeklies in a year, you're going to go through 52 settlements. If you write 12 monthlies in a year, you're going to go through 12 settlements. Andrew's point is spot on. The thing that's going to go wrong is settlement. It's not erosion. Erosion's kind of easy. And yes, weeklies win on erosion, but they lose on settlement because of the gamma issue.
Well said, sir. I think we got time for one more here. I want to rope in Uncle Mike Tusaw as well. I think we got a Tusaw special here for you, Uncle Mike. This one comes in from a frequent Twitterer and question asker, Mark Brandt. He's got a good suggestion for you, Uncle Mike. He writes a lot of abbreviations in the Twitter questions, which it's always make them fun to read. Let me see if I can straighten this out for you. Near the Monday close, buy the call or put that reflects the day's directions, and then I'm assuming he means take profits near the Friday close. I think it's a positive expected value over a year. Uncle Mike, you're our resident Apple devotee. What do you think here about Mr. Brandt's strategy?
You know, I haven't really looked at on that close of a time frame. Typically, what I like to do is I'm more of a reversal person in Apple, and that's how we've been able to finance a lot of the premium through the years. But I think my timing is different from Mr. Brandt in that a lot of times I'll do maybe like a 10-day option on it if I'm looking to finance something and not necessarily looking to do something on Monday through Friday. So it's an interesting thought, but typically I'm looking more along the lines of reversals, and that, let's say Apple has a rally, I would probably put on, say, a bearish put calendar spread, or if Apple has a dip, maybe I would put on a bullish short put spread, something along those lines. But my timing is typically a little bit different than what he's looking at, because a lot of times I'll do something over the course of the following week. And not to say it never happens, but I haven't done too much on a Monday. Just to add something about the Incredible Hulk's question, I had a client call me one time. He was short a put spread, and it was an out-of-the-money put spread, and the stock went against him. And so his thought was, he was still long-term bullish on the stock, even though it went down a little bit. And he thought, well, should I add some deltas by selling some more puts or selling some more put spreads? And I said, well, you don't have to, because the market already added some deltas for you. And he kind of looked at me, or he didn't look at me, it was a phone call, but he said to me, he's like, well, how is that possible? I still have the same amount of contracts in. How do I have more deltas on? And once again, I told him, well, the market took care of that for you. If you want to buy more of it when it goes against you, sell some puts, because then you'll be long more deltas if something goes against you. And if you want to get out of some deltas if it goes your way, sell some puts, because of the fact that as it goes higher, you'll have less delta exposure on it, because the short put or short put spread, whatever the case may be, the gamma will kind of adjust all of that for you. So just something to add to that. If you are someone who likes to scale into trades and maybe sell more puts if it goes against you, remember, you kind of don't have to, because the market does that for you.
Well said, sir. That's unfortunately all the time we have here for the mail block. Great questions, everybody, as usual. Meantime, we're going to keep on rolling right on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. You guys know the drill. This is the portion of the show where we tell you what we're keeping an eye on in the week to come and going into the weekend. Mr. Viceroy, perhaps we'll start with you. What are you keeping an eye on going into this weekend here, the first big weekend here for us, at least on the show, of 2015?
Well, employment numbers coming out tomorrow. We're going to get some statistics, but the market seems to have been driven off oil prices, and it caught its legs today because oil really kind of stopped going down. It's not that it went up. But watching the VIX, watching both oil contracts, I traditionally watched the crude, and I got a number of emails from folks who kind of shared the opinion that looking at West Texas was kind of a better weather vein. but watching crude, watching volatility, rates, a little surprised the 10-year dipped below 2. I get a lot of emails every time I talk about the 10-year. But looking at the 10-year, got a call today from a distant member of my family who just refinanced at a remarkable rate, a surprising rate, and had heard a couple of shows. And I had talked about, I thought rates were going lower. So they actually said they'd waited, which of course generally is the sentence you hear before. Now I've given it to my attorney because of your forecast. But looking at the macro events, a little surprised the geopolitical stuff we had this week didn't kind of shock the market more. In a sense, I'm glad it didn't shock the market more. But that's what I'm keeping an eye on.
Mr. Tusaw, same question for you, sir.
Similar answer in that tomorrow's obviously the big non-farm day, so I will be watching with, as you would put it, bated breath an hour before the markets to see what happens. And then also, one thing I'm just looking at SPY so far in the year, we're relatively flat on the year. Granted, we've definitely not had boring days by any means, but I think tomorrow really could kind of signify the first trading day of the year in that we're right where we were on New Year's Eve, and tomorrow I think we'll start a direction either to the downside or the upside.
And Mr. Rocklop should take us home. What are you watching the rest of this week, sir?
Did Tucson just say it's going to take us to the upside or downside?
Yeah, unusually.
My 50% guarantee I always give.
Unusually stalwart for him.
He went so out on a limb, I don't even know how to follow up on that one. Watching just non-farm payrolls, and if we let's just get back to those all-time highs. What the heck? The problem is it's going to be harder to do it with 10% of the market trading at about a 50% discount. That being the oil stocks than it was before. So this is I guess the hardest part or the weirdest part of the rally is like stocks like, Google didn't really do much. Google's well off its highs. Nothing like Apple, obviously, really close to its all-time highs. So a couple of leaders really aren't doing much leading anymore, which gives a shot for things to go higher. But overall, I think there'll be a decent payroll number. The U.S. is still the hottest chick at the dance. And we're going to keep rallying as long as the current policies don't change a whole lot. And that's what I feel. I mean, the only thing that makes the market sell off is everybody worries about something happening overseas. But ultimately, bad things really don't happen unless, there's something that comes out of left field from Japan or something like that when they finally realize they just can't pump money forever. But a lot of these, I think, sharp rallies have come from the fact that the expectation of low interest rates are going to be for a long time, and that seems to make everybody very happy, and it seems to make stocks jumpy after they've already sold off hard. And that's kind of what tomorrow is going to look like, I think, after the non-farm payrolls, and I'm looking for 16 VIX by the end of the day tomorrow.
Yeah, our first non-farms of the year, and if it all holds like it has in 2014, it probably will be a big shrug, and then we'll get all the rest of that juice out of the market there. Like what you're saying.
Another tick and ball goes down.
Yep, there we go. All right, and let's wrap it up here with what's coming down the pike. Mr. Rock Lobster, we'll start with you. Go back around the horn. What's coming down the pike in 2015 over there at the pit?
We have a bunch of advanced webinars coming out. I have a webinar next week sometime, but I don't have the date in front of me because I am a numbnuts. Oh, yes. No, it is. January 17th on a Saturday, we'll be doing option trading for stock investors, basically using the natural leverage and options just to try to enhance, performance. So that will be the 17th. Almost all our webinars, you learn something, and it gives you a look into how we do things at Option Pit. And it should be, if you go to our website, optionpit/events, you will see the link. You can sign up and you can listen to Mark and I discuss how best to use options to get done what you want to do.
Uncle Mike, same question for you, sir. What's coming down the pike at RCM Wealth Advisors?
Lots of things. We have events throughout the year, different cities and places. Nothing in the next couple of weeks, but we will be updating you as the events come closer. Also, we have our educational series we'll be coming out with in another couple of months, option trading. Personal finance, the option trader's point of view on it. And then finally, something with which we're considering at this point, you could pull out some of my strategies and make them speculative if you take a piece out of the puzzle. We're considering unveiling some of those things and dipping our toe in the speculative world, so to speak. But more on that.
Wow, crazy town, sir. You're really going off the deep end in 2015. I'm looking forward to more of that speculative craziness from Uncle Mike Tusaw. Meanwhile, Mr. Viceroy, take us home. What's coming down the pike here at OX?
4 events next week. Monday the 12th, Nina's going to do order entry and advanced features on the site. One area she'll focus on is the walk limit. Tuesday, Nina's going to do 3 and 4 leg, and this is a new webinar she started predominantly for some of the Street Smart Edge people who now have 3 and 4 leg on Street Smart Edge. So that's one that sort of crosses both the OX and the Schwab real estate. Also on Tuesday after the close, I'm going to do Idea Hub just on the securities side. Not going to do the futures option side. Those will be coming up. And then on Wednesday, Mike Zaremski, who runs our futures desk, is going to talk about trading futures for new customers. And this is an area, if you want to get a futures options account going, worthwhile to listen to Mike. Very, very sharp guy.
All right, everybody, that's going to do it for us here on this 399th episode of the Option Block. We'll be back on Monday, and then your listening ears on Tuesday with our 400th episode spectacular. We'll figure out something to do by then that will make that show interesting and fun and a little bit different from our regular shows. But in the meantime, have a great weekend. We'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.